A warm welcome to you, my dear students. We are back. We meet again with a question from chapter Unit 11. The last question of Unit 11, the last question that we are going to do. Unit 11, children. Unit 11. The trial balance. Trial balance. Trial balance. This lesson was this is actually finished. Lesson is finished. From the lesson, we are going to do this question to make you practice and improve yourselves better, to be better in doing this type of questions. All right. So Unit 11, trial balance. Trial balance. Here we go. From the trial balance, we are going to take this question. Following balances were available as at 31st March 2021. Thisara Enterprises is engaged in trading. That's what they are saying, huh? That's what they're saying. Yeah, that's what they're saying. Balances are given as at 31st March 2021 from Thisara Enterprises. This is the business. Thisara is the business owner, maybe the businessman who's carrying out this business, and we have his business, Thisara Enterprises. Yeah, he is doing a buying and selling of garments. He's doing a buying and selling business. And what is he buying and selling? Buying in bulks and selling to customers. Garments is buying and selling garments, which means textile business. It is a textile business, all right? Textile business. They have provided us balances, the following balances. Now, when we say balances, when we see this word balances at the beginning of an accounting period, we should understand one thing. This business, this Thisara's business, right? This business is not a newly started business. This business is not a newly started business. Why am I saying so? Why do I say so? Why do I say so? It's not a newly started business, all right? That is what you should understand. It is not a newly started business. Why do I say so? Why do I say that this is not a newly started business? No, not a newly started business. There are balances. There are balances given. See, children, all these are balances. Balances coming from the previous accounting period. So this business has been continuing for a period of time. This business has been, continuing for some time. Thisara is not starting a business on this date. Okay. Balances are coming from 31st March 2021. Now let's go and see what we have to do in this question. We have to prepare cash book, bank book, purchases journal, sales journal, and relevant ledger accounts as at 31st March 2021. Trial balance with the trial balance as at 31st March. This is the date, see, 31st March 2021. All right. Coming back to the beginning, 31st March 2021. All right. Okay. So are these the closing balances? Are these the closing balances? Children, this date, if this is 31st March, third month is March, January, February, March. If this date is 31st March 2021, and if all these transactions are given for the month of March, these transactions occurred in the month of March. If all these transactions happened in the month of March, okay. If 5th March, 8th March, see, 5th March, 8th March, 12th March, 18th, 10th March, 15th March, 20th March, all these transactions have happened in the month of March, Martu-masi, okay. And they are asking us to prepare, see, all these payments have happened in March. Payments and related information. 9th, 10th, 11th, 20th, 22nd, all the transactions have occurred in March. And they're asking us to prepare the trial balance as at 31st March. 31st March. 31st March, see. The dates don't tally, right? The dates don't tally. This must be a mistake in the textbook, right? We can prepare all the books and all the ledger accounts, and we can extract a trial balance as at 31st March. It doesn't matter, we can do that, right? We can. 31st March, end of the month, we can extract a trial balance. But then these opening balances which are given here, these opening balances should be given as at the beginning of March, that is 1st of March. Should be 1st of March. You understand, right? Beginning of the month, we have these balances in the books. Then during the month, these transactions have occurred, all these transactions. 5th March, 8th March, 12th March. Likewise, all these transactions have occurred in the month of March. Martu-masi, during the month, see, 2nd March, 7th March, 13th March. More transactions, see, 9th March, 10th March, 11th March, 20th, 22nd. Everything has happened in the month of March, and 31st end, we have to prepare the trial balance. So these balances must be the opening balances. If they are opening balances should be given as at 1st March. I hope you understand, right? Small mistakes in the textbook, it's natural. These things happen. So these are the opening balances. Opening balances given at 1st March. Given as at 1st March, beginning of the month. Let's record all these balances. You know what? For each and every balance, we must draw or we must prepare the relevant account. In other words, if the cash balance is given, cash in hand, this is the cash balance. We need an account for cash. If the bank balance is given, we must prepare the bank account. If debtors balances are given, we must prepare the debtors accounts and capital account and creditors accounts. All these accounts must be prepared. What are we waiting for? Let's go. We'll prepare this. We'll finish it off. Going forward, we have a blank page to start off our question. We need these accounts. What accounts? We need the cash book, the bank book to close. Bank book. Right. All right. Small things lead to big things. Small things lead to big things. Yeah. Right. Again, bank book 2, we need the same columns, same format, right? Right. Yeah. Small things lead to big things. Small things lead to big things. This is the center line. Okay, done. All right, let's write down the names. Cash book, bank account. I always say bank book. It doesn't matter, you know, the same format as the cash book, and as well as the cash book, the bank account is also a prime book as well as a ledger account, just like the cash book. You understand what I'm saying? You understand what I'm saying, right? Just like the cash book, bank book also, it's a prime book as well as a ledger account. So you can say bank account, you can say bank book, it doesn't matter. All right. Now, children, we have, yeah, cash in hand, that means the cash balance we should record. Bank balance we should record. Debtors, we need 2 accounts, Pubudu Kumudu. We'll draw those 2 accounts, Pubudu and Kumudu. I'm going to draw Pubudu's account and Kumudu's account, but T formats, right? I'm going to draw T formats, T. Next slide, I'm going to draw T formats for Pubudu and Kumudu, yeah, and the creditors too. For creditors, we'll use this color. Okay. For creditors. These accounts are for creditors. These accounts are for Pubudu and Kumudu debtors. Okay. Let's write the names, huh? Pubudu account. Pubudu account debtor. Kumudu account. Kumudu account. Kumudu account debtor. Let's check who are the creditors. Let's check who are the creditors. We have creditors Anushka, Kanishka. I think it's Kanishka. Anushka, Kanishka. Yeah, Anushka, Kanishka. We have Anushka account, Kanishka account. Right. What else do we need? What else? What more we need? That's it. No, we have to draw one more. It's the capital account. We have to draw the capital account too. Yeah, you have to draw every single account to record the opening balances. If an opening balance is given, for that you need to draw an account. Capital, capital, capital. Right. This is my capital account. Here you go, capital account. Capital account. Okie dokie. We are going to start this question. Let's put the opening balances. We have drawn the cash book and we have to record the balance of the cash book, 80,000. Bank balance also 60,000. Let's record. Normally, when cash balance is given, children, the cash balance is normally, usually should be in the debit side. So first March balance brought forward in the debit side. Bank book also first March balance brought forward in the debit side. I can't understand why I don't remember these amounts. 80 and 60. Remember, when you are going to record the opening balances, record them at once, at least in 2 accounts. Save time. So cash book opening balance will record 80 and 60 in the bank book. 80, 60 in the bank book. And I remembered the opening balances of these two debtors. Pudu balance brought forward 50. I remembered it. And Kumudu balance brought forward 40. Let's see whether my memory is correct. Pubudu 50, Kumudu 40. That's how you do it. You record the balances at once. Let's record all these balances at once. Capital balance 150,000. 45 for Anushka, 35 for Kanishka. 150 for the capital account. Now something interesting. In the capital account, which side should be the BBF? Debit side or credit side? Capital account, the BBF is, usually the balance is in the credit side. 150 is the balance in the credit side, it should be capital account. Anushka, I remembered Anushka's balance brought forward, the balance of Anushka. That must be 45. Yeah, as I can, if my memory is good. I know my memory is good. I know. So it should be 45. 45,000. But Anushka is a creditor. These are creditors. Children, these are creditors. Anushka and Kanishka, both are creditors. Both are creditors. Okay. So creditors opening balances should be in the credit side. 45 for Anushka, 35 for Kanishka. Let's see whether my memory is good. 45 and 35. Of course, 45 and 35 for Anushka, 45 for Kanishka, it's 35. Opening balances done. Okay, we're going to the question now. Here we go. Starting off. Credit purchases. These transactions occurred in the month of March. Credit purchases, we have from Anushka 38,000, from Kanishka blah blah blah. Trade discount deducted, they have given trade discounts. Yeah, we have to calculate those trade discounts. Let's do it. Roll on 5th March. Invoice number 45, 38,000. From that we must deduct 10%. Okay, let's do the calculation right here. Let's do the calculation right here. Yeah, 38,000 into 10%. 10%. 10 over 100. The answer is 3,800. Answer is 3,800. Okay. 3,800 is the answer. That 3,800 must be deducted or subtracted from 38,000. When you minus 3,800 from here, how much? 38,000 minus 3,800. That is 34,200. Answer is 34,200. You subtracted the trade discount, which is the 10% discount given here. 34,200. The 10% discount is deducted from 38,000. When you calculate 38,000 into 10 over 100, 10%, the answer is 3,800. That is the discount amount, 3,800. And you minus 3,800 from this 38. And it becomes 34,200. That is the net value you should record in the purchases journal. We need a purchases journal. Did we draw a purchases journal? No, we didn't. We have to. Let's draw the purchases journal to record these credit purchases. Shall we? Where is the purchase journal? We did not draw a purchase journal. We have to draw a purchase journal. All right. Purchases journal. We have the ledger accounts here, more ledger accounts. Let's draw the purchase journal here. Purchases journal. We're gonna draw a purchases journal. Yeah, purchases journal. And not only that, we need a sales journal too. Of course, we need this. Date, invoice number, description, amount. Okay. Same goes for the purchases journal. Date, invoice number, description, amount. All right. And right. We have the purchases journal and the sales journal. Let's name this purchases. Purchases journal. Let's name this one sales journal. Okay. So we have the purchase journal and we have the sales journal. Let's name the columns very quickly. Date, invoice number, description, or you can write supplier, and value in rupees. Here in the sales journal, also date, invoice number, description, and value in rupees. All right, here for sales journal, just like you wrote supplier in the purchases journal, you can write customer for the sales journal. Customer for the sales journal. Instead of description, you can even write customer, it doesn't matter. Description, instead of description for the purchase journal, you can write supplier. Okay, yeah. Now go and take the transactions of credit purchases. Take the transactions of credit purchases. Here we go, credit purchases. Credit purchases, these transactions have occurred. See, credit purchases. 45 invoice number. 38,000 is the invoice value, but listed price, 38,000 is the list price, but when 10% discount is calculated, it is 3,800, and from 3,800, from 38,000, 3,800 is subtracted. Net value is 34,200. Let's go and record in the purchases journal because it's a credit purchase. 34,200. Where? This is the purchase journal. Okay, here we go. Date is 5th. I remember it. Invoice number 45. Anushka. $34,200. This is the amount. Go back and recheck. Go back and recheck. Here. Date is 5th. Date is 5th. 45 is the invoice number. Anushka, from Anushka, we have bought 34,200. Right. Next, we will take it and go. Next, date is 8 from Kanishka, 42,000. 8 from Kanishka, 42,000 goods we have bought, no discounts. So 42,000, invoice number 56. 42,000, invoice number 56. Invoice number 56 from Kanishka. 42,000. Go back and recheck. Go back and recheck. We do this just to confirm. Yeah. Everything should be at once done in the proper manner. All right, 42,000 from Kanishka we have bought. We have purchased. Invoice number 56. Yeah, 42,000 from Kanishka we have bought. Invoice number 56. It's done. Again, 48 from Anushka, goods worth of 34,000, but 5% discount should be deducted. From 34,000, 5% means 1,700. From 34,000, when you calculate, it becomes 1,700. Okay. Right, let's see. From 34,000, when you calculate 5% discount, 5 over 100, the answer is 1,700. That is the answer. 5%. Okay, 1,700. And that 1,700 must be deducted, subtracted from 34,000. 34,000. Then it becomes 32,300. 32,300. Yeah. Well, you do your math. I'm not doing math for you. You have to do your calculations. Okay. These are all about calculating properly. I mean, calculating correctly, calculating accurately. These sums, these questions are all about calculations and correct calculations and correct recording. Yeah, there are no formulas, no equations, nothing. Just calculate correctly and record correctly. Then you have to subtract from 34,000. Yeah, it becomes 32,300. You must go back to credit purchases now. You must go back to the purchase journal. Anushka, 32,300. Invoice number 48. Anushka, 32,300. Date was 12th, as I can remember. Go back, check, go back and check. Date is 12th, invoice number 48, Anushka. Date is 12th. Yup, date is 12th. Everything is falling into place, right? Date is 12th, 48 is the invoice number. Net value is 30 after you deduct 32,300. Last one, 18th, again bought from Kanishka. 25,000 worth of goods. Let's calculate this. 25,000 into 4%, 4 over 100. What is the answer? What is the answer? 25,000 into 4%. Let's do the cal. Cut the zeros. 1,000. Minus 1,000 from 25,000. It's 24,000. Because when you minus this, when you minus the discount from this amount, 25,000 minus 1,000, it becomes 24,000. 25 minus 1, 24. Kanishka, invoice number 59. Let's go to the purchase journal, finish it off. Kanishka, invoice number 56. 24,000. I just need to check the invoice number. 59. 59. Invoice number 59. Done. Bye bye. Purchases journal. Bye bye purchases journal. Now we have to take those entries to the ledger accounts. Invoice number 59. Date is 18th. We have to take these entries, the totals, to the ledgers. You can't say bye bye purchases journal, I'm done with you. No, can't say that. Can't say. But we'll move on to the sales journal now. Okay. Here we go. Sales journal. We have credit sales. See, credit sales goes to sales journal. Sold to Pubudu, Kumudu, Pubudu and Kumudu. Same guys, same debtors. Oh no, we have calculations. We'll do the calculations quickly as possible. 20 shirts at 1500 each. So 20 into 1500. 20 into 1500. It's 30,000. 20 into 1500. 30,000. But didn't you see this? Didn't you see that? The sales policy of the business is to give 10% trade discount. You have to calculate 10% out of this when you sell goods. Sales policy. Sales policy. There's a policy of the company. They deduct 10% out of every sale. So 10 over 100. 10 over 100. 10 over 100. Okay, right, 10 over 100. What is the answer? The answer is 3,000. And what you do, 3,000 should be subtracted from 30,000. Then it becomes 27,000. Okay, subtracted from 30,000. Then the answer is 27,000. Get the details quickly. Invoice number 62. Invoice number 62. Yeah. Okay. Invoice number 62. Pubudu. We have sold to Pubudu. Amount is 27,000. 27,000 is the amount. Invoice number 62. 62. Pubudu. 7th March 62. Pubudu. 27,000. Likewise, I'm going to put all the credit sales quickly like that. Okay, you do your calculations. I'm not going to do every calculation for you, right? In the exam too, somebody is not going to do calculations for you, right? There is nobody to do your calculations. You have to do them. So from this point onwards, calculations done. Without all the workings, without showing the workings. You know now how to do. You know now. 10th, that is the next transaction. 10th, 63, invoice number 63, Kumudu, 25 trousers at 2,000 each. 25 trousers at 2,000 each. Yeah. Then the total value becomes 25 into 2,000. 25 into 2,000. It's 50,000. Yeah. 50,000. 50,000, from 50,000 you should minus 10%. 50,000 minus 10% of 50,000. When you calculate 10% out of 50,000, it is 5,000. And when you minus 50 minus 5, 45. Invoice number 63, Kumudu, 45. Invoice number 63, Kumudu, 45,000. All right. Let's go to the next one. Now we did this, and we did this, and we did this. Next one. 64, invoice number 64. 40 children were at 600 each. So 40 into 600. 40 into 600, that is 24,000. 24,000. 24,000 minus 10% out of 24,000. 24,000 minus 10% out of 24,000 is 2,400. 24,000 minus 2,400. 2,400. How much? 21,600. That is the amount for this. 64 to Pubudu we have sold. 64 to Pubudu. Invoice number 64. Pubudu we have sold 21,600 worth of goods after the discount is deducted. Yep. Right. 21,600. That's right. Last and final sale, credit sale in this question. This is done. And this one is the last credit sale. 20 sarees at 1,800 each. 20 sarees at 1,800 each, which means it's 36,000. Yeah, 36,000. Here 20 into 1,800 means 36,000. 36,000 into 10% is 3,600. 36,000 out of 36,000, 10% means 3,600. That's why we minus that. That is the discount. 3,600. When you minus 3,600 from 36,000, 32,400. Let's go and record. Invoice number 65 to Kumudu. 32,400. Go back and check. Kumudu. Invoice number 65, 32,400. Invoice number 65, that's correct. Kumudu. Amount is 32,400. That is the net value. So this is also done. This is done too. Finished. Credit sales, credit purchases, finished. Now, what do we have next? Credit sales, credit purchases, done. Okay. Next we have cash receivings and payments. Okay. Cash receivings and other related information. See? Sales. Cash 20,000, check 5,000, deposited the check immediately in the bank. Which means we have sold goods worth of 20,000 and taken 20,000 in cash. Put the cash to the cash drawer, to the cash register. We have taken another 5,000 by a check. By a check. Check is sent to the bank, deposited the check immediately in the bank, which means 20,000 goes to the cash book, 5,000 goes to the bank book, and description is sales. 20,000 goes to the cash book, 5,000 goes to the bank book. Okay, cash book, bank book. 20,000 cash, 5,000 into the bank. From Pubudu, we have received 8,500. From Pubudu, we have received 8,500. Okay. Now, aren't we forgetting something? We are forgetting. Where is the double entry to these two? We just recorded in the cash book and bank book, both debit. Where is the credit? Credit goes to the sales account. Sales account credit, sales account credit. Sales account should be credited with 20, sales account should be credited with 5. Where is the sales account? We don't have a sales account. No, we don't have. We should draw. So we are going to draw the sales account. Here we go, sales account. Sales account. Credit 20,000 and 5,000. 20,000 is a cash sale, 5,000 from to the bank. 20,000 received as cash, 5,000 received as a check. These are the entries, 20 and 5. Okay. Okay. What else? From Pubudu, we have received 8,500. Cash received from Pubudu, 8,500, which means cash book should be debited because we are getting cash. Pubudu is the description, and where is the credit entry of this? It goes to the Pubudu's account. Where is Pub? Mr. Pubs is here. Goes to the credit side of the Pubudu's account. Cash 8,500. Cash 8,500. Okay. That is also done. Done. From Kumudu, a check is received. From Kumudu, a check is received. See the check, 12,400. This check was deposited on 6th March, the same date, 6th March, in the bank current accounts. Directly, this 12,400 goes to the bank current account. So, again, money coming into the bank from Kumudu. So, we write Kumudu 12,400. Kumudu 12,400. Yeah. And double entry. This is the debit entry. Where is the credit entry? It goes to Kumudu's account. Pubs is here. Mr. Pubs, Mr. Kums and Kumudu is there. 12,400. Yep. Bank 12,400. Okay. Okay, 12,400. That's done. Again from Pubudu, 16,000 received. Check was deposited on 10th March. So 7th March we received 16,000. Yeah, 16,000 from Pubudu in cash. 12,000 as a check. $12,000 as a check. Check was deposited on 10th March. 10th March only check was sent to the bank. Until then, check was in the cash drawer because it was received on 7th. What we do is on 7th we put 16,000 and 12,000 both to the cash book because the check also came into the cash drawer. It didn't go to the bank immediately. To the bank it was sent some few days later. Okay, 16,000 and 12,000 from Pubudu received cash from Pubudu. 16,000 and from Pubudu 12,000. This is a check. You have to mention check. This entry Pubudu, with that you must mention check. Then it's clear to everybody that it's a check. And 12,000 is received by a check, although the check we got from Pubudu, we didn't send the check to the bank. We kept it in the cash. That's why it is entered in the cash book. Okay. Now, double entries, children, double entries. 16 and 12, both should be credited to Pubudu's account. This one and this one, both in Pubudu's account. Where is Mr. Pubs? He's here. He's here in the credit side. Let's go. 16,000 and 12,000. 16,000 cash, 12,000 bank. Okay. Done. Last one from Kumudu, again 8,000. No chatter batter. Only 8,000 is received from Kumudu. No discounts given. Okay. No. 8,000 in the debit side of the cash book. Kumudu. And in the Kumudu's account. Okie dokie, that is also done. So remember children, there is an adjustment here. We should enter this 12,000 into the bank on 10th. Right? Let's do it now. Let's do it now. On 10th, check was deposited in the bank current account. What we do is, we go to this transaction, which is on 7th, we have received Pubudu's check. On 10th, we put it to the bank. So, bank account, we debit with that amount. Which amount? This amount. Pubudu and it's coming from cash. 12,000. 10th. All right, debit the bank book, credit the cash book. You write again Pubudu, this is the entry, Pubudu, and within brackets you write bank. 12,000, that's it. Okay, that is how you deposit a check which is already added to cash on a later date. On a later date. 7th, you added the check to cash. 10th, you took the check out of the cash and sent it to the bank. That is on 10th. Same date here. I hope you can see. All right, that's it. So this is done. Okay, finally we have some payments. We have paid to Anushka 13,000, a check. That means bank account should be credited. 13,000 to Anushka, money going out from the bank, so it's credited. Debited to Anushka's account. Where is this guy? Where is this guy? Anushka. Oh, he's here. Should be debited to him. Should be debited to him. Bank. What is the amount? 13,000. What is the date, children? 9th. 13,000 recorded in the bank account, credit side. Here. 9th. Bank account credit, Anushka's account debit. 13,000. Okie dokie. What else? 10th. To Kanishka we have paid 15,400, that is cash. 15,400, that is cash. Paid means cash account credit. To Kanishka, 15,400, that is 10th. Is that correct? Of course. 10th to Kanishka, 15,400. Where is the double entry of this? Cash book credit, Kanishka's account debit. Where is Kanishka? Is here. I'm always moving to that and moving to this, both sides, because we have account on both sides. I have to move, yeah. Debit, 10th, cash. How much was it? 15,400. 15,400. Oh yeah. Now we are done. No, 2 more. Purchases 16,000 from cash, 14,000 by a check. So money going out more and more. Purchases 15,000 spent from cash, 14,000 spent from a check. Both descriptions should be purchases. Purchases. Now where is the double entry of that? We have to draw the purchases account. We have to draw the purchases account, yeah? Yeah. Yep, 15,000 and 14,000. Just like the sales account, children, we'll draw the purchases account, okay? Purchases account. Because 15,000 and 14,000 was credited as purchases, now we have to debit the purchases account. Wow, so much work, right? So much work, no doubt about that. Cash 15,000, bank 14,000. Voila! Now we are done. Yeah. Such a big deal of work in a small question. Everything should be accurately done. Otherwise, your trial balance will be messed up. It won't balance. And you feel like so disappointed when that happens. You don't want that. You don't want that to happen. So pay attention. Some more, a little more left. Yeah. Not much. Okay. Yeah. Purchases 16,000 and 14,000. We recorded it. Right here. 15,000 and 14,000. Credit, cash and bank. Debit, purchases account. Finally, this is done. Oh, it is 16,000 and 14,000. Yeah. Oh my God, it's 16,000 and 14,000. Small mistakes. Small errors, mistakes can ruin everything. Ruin everything. And we don't want that to happen. Be careful. Be careful. Last but not least, we have salary 8,000 and 12,000. From cash 8,000 paid, from check 12,000 paid. Salary. Both are payments. So salary from cash 8,000 paid, from check, which means from the bank account going out, or money spent. For salaries 12,000, money paid out, bank account credit. Check 8,000 and 12,000. We need a salary account now. Oh my world, so many accounts, so many accounts. It's like that. We need a salary account. We'll make this the salary account, huh? Yep. Salary account. 8,000, 12,000. $8,000 and 12,000. Cash and check. From cash 8,000, from bank 12,000. Okie dokie. That is also done. Finally, to Kanishka, we have paid from a check 16,000. So again, from bank account money going out to Kanishka. From bank account money going out to Kanishka. To Kanishka. How much? To Kanishka, how much? 16,000. 16,000, yeah? Money going out to Kanishka, 16,000. Where is the double entry? Bank, credit. So Kanishka should be debit. Find this guy. Where is he hiding? Where is he? He's here. Kanishka debit, 16,000. Alright, children. I give up. I give up recording because I'm done. I finished recording. Now, let's see. Activity number 2. We started by recording the balances. Opening balances, right? It's done. Opening balances recorded. Opening balances recorded. Pubudu, Kumudu, Anushka, Kanishka, all the debtors and creditors. Then we recorded the credit purchases after calculating the net amounts. Credit sales after calculating the net amounts. We recorded in the credit purchases in purchases journal. Where is it? There you go. Purchases journal and credit sales in the sales journal. Okay. Yeah. Nicely done. Then we got after credit purchases and credit sales finished. Then we got receivings of cash and checks. We recorded in the cash book and bank book. Payments of cash and check. We recorded in the cash book and bank book. Done. So this is okay. This is okay too. This is okay again. This is okay. Okay. Relevant ledger accounts also okay. Now you are only left with, now the only thing which is remaining, is taking the totals of purchases journal and sales journal. You know how to transfer the totals to ledger. Take the total, debit the purchases account with the total, right? Let's take the total. 32 plus 32, 32,000 plus 34,000. 66,500. 108,500. 132,500. You must write debited to purchases account. That is the description. Debited to purchases account. Take the total of the sales journal. Take the total. Taking the total, right? Taking the total. 27,000 plus 21,000 is 48,600 plus 32,000 plus 45,000. 126,000. 126,000. Write this sentence. Credited to sales account. credited to sales account. Okay, credited to sales account. And let's do it. Let's debit to purchases, credit to sales. Debit to purchases, saying creditors 132,500. Credit to sales, saying debtors, description debtors 126,000. That one. Debited to purchases 132,500. Purchases debited 132,500. Credited to sales 126,000. Sales credited 126,000. Remember the description should be creditors and debtors. Okay, yeah. Now what is left for you is only the most fun part. What is left to do is the fun part, the calculations, the balancing part, adding and subtracting. Children, I leave you with that part. I'm not going to prepare the trial balance for you. As I always tell you, it's you who should do the calculations. It's you who should do the accounts. It's you who should balance. It's you who should take the balances and prepare the trial balance. And it's you who should balance the trial balance. Entire work is done, the confusing part, of course, done by me. Now you are left with the fun part, that is the balancing part. Balance the relevant ledger accounts. What are the ledger accounts? These accounts. Cash book, balance it. Take the balance brought forward, PBF. Put it to the trial balance. Bank book, balance it. Take the balance, put it to the trial balance. All these debtors accounts, balance them. Take the balance to the trial balance. All these creditors accounts, balance them. Take the balance, put it to the trial balance. Debtors accounts, when you take the balances, normally the balances come to the credit, no, debit. Yeah, normally debtors accounts have debit balances. In the trial balance also debit. Creditors accounts have credit balances. Okay, right. Balance these other accounts, sales account, purchases account, salary account, capital account, balance all the accounts. Take the balances and put them to the trial balance. And the journals are done. Journals are done. We transferred the journal totals to the ledger accounts. The journals have been totaled, additions have been taken and transferred to the ledger. Only that part is remaining for you. Which part? The fun part. Take all the balances of the ledger accounts, transfer to the trial balance correctly to the debit and credit sides. Use dead click system. Okay, dead click system. Okay, dead click. That's about it. So we end the unit 11 from this point, and your syllabus is almost done, almost finished. We have one more lesson, that is correction of errors, correction of accounting errors. Quite a long one, but an important one. I mean, it will be useful for you, because normally, usually, exam in your O-level exam paper, there's a high probability to get a question from errors, correction of errors. I will meet you with that lesson, unit number 12, correction of accounting errors. Until then, do your work, more trial balances, find past paper questions, and do your work. Very small time left for your exam. Don't forget to have a great time, have fun doing your work, and I'm hoping to see you soon. Thank you.